The key to getting approved by Younited Credit lies in a combination of financial preparedness, understanding their criteria, and presenting a strong application. Younited Credit evaluates borrowers primarily on income stability, credit history, debt-to-income ratio, and the purpose of the loan. Ensuring these areas are solid increases the likelihood of approval and may even improve your interest rate. Start by reviewing your credit report. Any errors or outdated information can negatively affect your chances. Clear any outstanding debts that are past due and avoid applying for new credit right before submitting your Younited application. A clean credit record signals reliability. Income documentation plays a crucial role. Younited Credit requires proof of consistent income. Pay slips, bank statements, and tax returns that show steady earnings over the past few months strengthen your profile. If your income fluctuates, providing additional documents like contracts or invoices can help establish stability. Debt-to-income ratio is another critical factor. Younited Credit prefers applicants whose existing debts do not exceed a manageable portion of their monthly income. Reducing high-interest debts or consolidating loans before applying can make your application more attractive. The loan amount and purpose should be realistic. Requesting an amount aligned with your financial capacity demonstrates responsibility. Clearly stating the purpose of the loan, whether for personal projects, home improvements, or debt consolidation, adds credibility to your application. Finally, the timing and accuracy of your application matter. Submit all documents correctly and ensure your personal information matches official records. Inconsistencies can cause delays or rejections. Using these strategies can maximize your chances of approval and secure favorable terms. Following these steps positions you for a smoother and more successful Younited Credit approval experience, allowing you to access the funds you need efficiently.